Hi, Raoul. Great to have you
How
on board. I'm good. Great to have you on board as a user of Quidroom and for the podcast.
Fantastic.
Yeah, see, I love what you have been doing in the digital asset space, and I have been following it. And yeah, I mean, I just recently got to know that you're also running a crypto fund of fund, which is great, and you have been getting commitments for that. So that is pretty amazing as well. But otherwise, just taking a step back, ex-GLG, ex-Goldman Sachs, and then after that, you went into running your own macro research shop. Pretty interesting stuff. And then after that, of course, Real Vision. I do not know anyone in the industry who does not know Real Vision. I mean, you guys have been creating some really good video content out there for all institutional macro analysis and crypto research. Some really good stuff. I mean, I really love, and I'm a fan of your content. That is there for sure. Okay. Yeah. So to everyone who's listening, do check the brand out in case you do not know it at realvision.com. See exactly the kind of content that Raoul has been producing. It will be very interesting stuff if you guys are into crypto or into anything related to digital assets. Now for this meetup, this is going to be all about allocation in digital assets, Raoul. And what the format is going to be, we'll just start with some obvious questions, and then after that we will progress to some of the questions that investors have thrown in, because it is supposed to be also an AMA session as well, quasi AMA session. So I will be just reading out some of the questions that they have. But in the beginning, what we're going to do is we'll start with Bitcoin and the obvious fact that Bitcoin has lost almost half of its value in the last 6 months, and volatility remains high. But you know what is the interesting parts, other than if you just not focus on the obvious fact, then of course China introduced digital yuan, and China completely banned cryptocurrency as well, right? And then in addition to that, Europe has been pushing regulation after regulation, like how Europe always does with everything else. Now, US is working on centralized development on crypto regulation, which sounds like a great news. I'm not sure exactly how it is going to turn out later, but it sounds like it is a good thing. But all of this put together, and with the things that is happening and with the volatility and everything in place, what do you think is a future of investing into cryptocurrencies, Bitcoin aside, into the whole cryptocurrency space?
So I think, look, the regulation is coming and it's a good thing. Even the China ban, I don't think sticks around for long. I think what they wanted to do is make sure all assets were converted into the digital yuan. And then once they had the digital yuan, they can then track where money flows go, because they've got a closed capital account. So I think that is also true elsewhere. I think Europe is just a little bit nervous about losing control, but we've seen Singapore do a decent job here. India's been struggling a bit. The UK has made it very clear that they're headed this route. Switzerland's done a great job. And the US looks like that they will follow suit and do the right thing in the end. So I think regulation is going to be a good thing, because we'll have clarity of what we can do. But what we've got here is we have the fastest adoption of any technology in all human history. So there are currently 300 million crypto users. I rebased them when we got to 5 million and rebased the internet at 5 million. The internet was growing at about 85% a year. For the first 6 years, crypto's been growing at 165% now. We've never seen anything like this, because it's built on top of the network effects of the internet. You've now got the network effects of the internet of value. And it's not just about money. It's about the exchange and storage of all digital assets. And in fact, in the future, every single contract, whether that's a ticket, whether that's a legal contract, whether it's an insurance contract, everything is going on blockchain. So we're seeing this incredible adoption of technology. Now, how to understand this space is using a formulation called Metcalfe's law. Metcalfe's law is used for these networks to understand how to value them. Most investors don't understand this. So they want to use discounted cash flow models. They want to understand this space with the lens of which they know. It was always wrong with Facebook, Google, Apple, all of these companies, even Tesla. They're valued as network adoption models. That means the value of the network is driven by the number of users of the network and the number of interconnections of the people on the network, or the value transferred on that network. So in something like Facebook, the network was owned by the shareholders, And we as users on Instagram or WhatsApp or Facebook got the benefit of the network. In crypto, the network owners and the users are the same thing, which makes it incredibly powerful and very fast adopting. It also tends to lead to volatility. If you look at a normal linear graph of any cryptocurrency, they all go like this, and everyone looks at it and goes, it's a bubble. The actual way to look at any of the price action is using a logarithmic chart. And you'll find that actually all smooth. It's the same for Facebook, Google, and Apple, and all of these others. They're just smooth logarithmic charts. But within that, there's a reasonable amount of volatility. And that's normal. So in the early days of Amazon, it went down 95%, then 65%, then 65% again, then 40%. And then now the corrections are no bigger than 30%. So Bitcoin went down 90% the first time, 80% the second time, 75% the third time, and now it's 50%. So the volatility goes down over time as more people join the network. And that network change has also been the adoption of institutions and family offices and others into this, because this started out as a retail thing, which is incredibly rare. We've never seen an entire revolution like this started at retail level. It's usually started at institutional corporation level. I mean, Bitcoin is not even a corporation. I mean, there's nothing, it comes out of nowhere. It's that. And the space is, so if you understand that, you'll understand that within the next 4 years, we will be at about 2.5 billion users. It might be even more. And by the end of the decade, we'll have about 4.5 to 5 billion. So just to give the size of the opportunity, and anybody on this call, I'm going to tell you one thing is you are unbelievably underweight. You have no comprehension of what is happening. None of us do, because we've never had to deal with something this fast. And what is amazing is it's currently about a $2.5 trillion asset. If I'm right with the extrapolation of the numbers, and there's no reason to not believe that, considering all the central banks and everybody are moving this way, then this is going to end up being, by the end of the decade, a $200 trillion asset. So the entire market cap of this is going up 100x.
And we are talking about blockchain in here, or are we talking about Bitcoin alone?
No, we're talking about the entire crypto space. So the market cap of the space, about 2.5 trillion. It's going to go to 250 trillion by the end of the decade. That's astonishing.
That is astonishing. And there is definitely a lot of promise around blockchain, and the use case of blockchain are just amazing, and how people can use it. Like the previous conversation that I've had around trade finance and the usage of blockchain for that purpose is amazing, and how you can use it for many other purposes is interesting. And I also heard from one of your videos as well, Raoul, and interestingly, this was also a question that was raised by one of the investors. It's mainly in regards to Bitcoin. It's about, what do you think is a future of DeFi on Bitcoin chain? So about projects like Sovereign BTC and usage of it and the growth of it in the next coming years.
So let me address DeFi first. So DeFi, decentralized finance, it's not all decentralized. Let's call it digital finance. There's an even better way of addressing it. Finance is going to be automated at scale. Now, just to get people's heads around this, there is 1.4 quadrillion of derivatives out there. They're all going on the chain. All the securities industry, all the bond industry, everything is going on chain. All of borrowing and lending is going on chain. And it's happening at scale. And it's happening mainly in Ethereum to start, but now it's spreading out into other ecosystems like Terra Luna and others. Bitcoin itself, I like to think of it as the collateral layer. So if you think of this borrowing and lending universe, think of all these derivatives and all things we all grew up in the finance industry. At the base of that is US treasuries. That's the base layer of everything. The base layer of this, I think, will end up being Bitcoin because it has this pristine collateral element. So if you think about the collateral that we use these days, US treasury, it's a weird thing. So in a crisis, a liquidity shortage, people want your treasury, so you lend them. Problem is the yields go down and they become less scarce because in a crisis, the central bank creates more treasuries generally. They generally print money, the government borrows. So you're actually lowering the value of your collateral in a crisis and you don't get paid much for it. Bitcoin is very different. You cannot change the supply. It is algorithmically written and unchangeable. So therefore, you will be able to charge higher yields when people want your collateral. So you're going to get compensated for the risk. In a crisis, somebody needs your collateral, you can lend it. So we're starting to see this in Terra Luna, which is one of the large ecosystems that's come up. It's called the layer 1. So it's an alternative to Bitcoin and Ethereum. They're using Bitcoin as the collateral to their stable coin. Okay, that's really interesting. Yeah. So it's not the US dollar they're using this. So here is Bitcoin being used in the DeFi system, but not DeFi. The probability of Bitcoin being used as a full DeFi layer is very low at this time because the chain is too slow, it's too clunky. You can use it by using the Lightning layer, which is a layer 2, which batches payments so you can do more. You can use it for some things, but right now, Bitcoin's nowhere in that race. What Bitcoin is and is the king of is this pristine collateral.
Pretty interesting stuff around that. Now, and you're absolutely right. I mean, blockchain and Bitcoin in itself, using that for DeFi, because it might not be the right thing to do. So it's important around that. But now there was also this question that the investor asked around the second part of this, which is the usage of a project like Sovereign BTC. He wanted a bit more clarity on that, whether that is going to be something that is going to be useful. If you're familiar with Sovereign BTC.
No, never heard of it.
Okay, all right. But then that's fine. So there was another question by another investor. This was around one of your old YouTube videos that resurfaced. It was a discussion that you had with Michael Saylor, in which Michael had cautioned you not to put money in altcoins. So he wanted your feedback around that and 5 topics from your end.
So, I mean, I am 99% everything else but Bitcoin.
Okay.
Because the rate of adoption and the growth of the networks in the space are much faster elsewhere. So I think that Bitcoin's dominance over time erodes. Michael Saylor is a Bitcoin proponent, and he is what's known as a Bitcoin maximalist. And that is a person that believes that the future of everything can be done on the blockchain for Bitcoin. Currently, that is not doable, but that's his perceived future, that all finance ends up, it's only one money that can happen. That doesn't look like that is going to be the case, but that is his view. And he's worried that maybe these others will get regulated. Again, having spoken to most of the regulators around the world, they are not going to suddenly ban Ethereum, or, these things. Are there fines for people like XRP Ripple? Probably, because they started in a way that maybe didn't work for securities laws. But in the end, nobody's going to get in the way of this. So I don't hold that view that Bitcoin is the one true God. I think it's a multi-chain world, and investors will make massive alpha from allocating to other cryptocurrencies and catching this adoption wave, the Metcalfe's law. You find the right ones and they will massively grow over time, much like Bitcoin did in its earlier days. But over time, since having that conversation with Michael, my bet in Ethereum has massively outperformed Bitcoin. It was up 4x versus Bitcoin last year.
Very interesting. And that actually brings me to understand your portfolio right now, Raoul, because this is all about allocation. So, I mean, we can't have a discussion around allocation without understanding exactly what you're allocating in digital assets.
So my allocation is probably 80% Ethereum.
Okay.
That is the fastest, most robust network. And it is catching up and outperforming Bitcoin. It's still a smaller market cap. So I think that is the safe bet. I own a very small bit of Bitcoin these days. I then have I created an allocation amongst an equally weighted basket of what I thought was macro bets within the space I was interested in. Some DeFi, some metaverse, some social tokens, some layer ones like Solana, AVAX, Terra, that kind of stuff. So that has been my core bet because I didn't know. It's very hard to know what is really going to outperform here. And then after that, I started this fund of hedge funds because I realized that I could allocate to hedge funds in the space who would be specific experts on certain parts of the ecosystem. And that was a more capital efficient way of doing it, because after a while, there's so much going on. It's moving so fast. Your brain hurts. You just cannot keep up. So I started to allocate to specialists as opposed to trying to do it all myself. But I still hold my core allocation. The biggest change in recent times is I'm probably about 10% in NFTs now.
Okay.
Because that whole ecosystem is the kind of applications layer. And NFTs right now, we see them as these community projects like Bored Ape Yacht Club, or we see them as artwork, but that's just the start of what NFTs are going to be. NFTs are the ability to transact, store, and have ownership for any single asset on the chain, a unique asset. So the difference between non-fungible tokens and fungible tokens is essentially that. Fungible is like, I give you $1, you give me $1, it's the same thing.
That's a usual social token.
Or a social token is fungible, but this could be a specific piece of art, an insurance contract, a derivative contract, anything.
Yeah. No, that's absolutely right. I mean, and the use case of NFT, I mean, is amazing. What is the length and breadth of, and what are the opportunities that you have when you use it for other different applications out there, right? And that also is, I mean, that also brings me to the question that one of the other investors asked, and this was mainly around social tokens. Because the perception was that the social tokens are mainly for celebrities to make money for themselves from the community, but and obviously that brings a hesitance that, okay, how can I think of this as an investable asset for myself? So that is interesting. Non-fungible, I understand. Non-fungible, I understand. NFTs, I understand. But yeah, it's an interesting point.
So this comes from a lack of understanding of what this is, what Web3 is. Web3 is all about community and participation in a network. So what a social token does, it gives you a stake in that network. So let's say you are a fan of Manchester United and you own a Manchester United token. That token gives you certain rights as a token holder within the community of Manchester United. Now, what that does is gives you opportunities, whether it's getting tickets or whether it's certain content or whether it's meet and greets or whatever it may be, certain merchandise. So it gives you access, closer access, gives you a direct relationship with the club. You may be able to choose the away kit. You may be able to do all sorts of things. But what's interesting is because you have participation in the club, you're not just a fan now, you're a part owner of the network, you will go out and try and promote the network. So everybody, you're disrupting, social tokens disrupt the entire business model of everything. Because now your consumers are joint owners of the network. So their job is to do the marketing for you. So if you think about fashion brands that have cultural identity around them, you would go and buy a Hermes Birkin bag or whatever the thing that you wanted, and that would be your identifier. Look at me, I've got this. If you're part of the Hermes social token, let's say that they launch one, well, then it becomes very interesting because you will now use your bag to put in TikTok videos or Instagram posts or anything else because you want more people to buy them or become involved in this network because the network value goes up. With pop stars, it's about sharing a song. So you create a song. I love the song. I invest in an NFT that gives me some of the IP of the song. I go and make videos for you. I tell all my friends. I do everything I can to promote that song because if it goes up in value, if people listen to it, I'm going to make money from it, as are you, the artist. So what you've done is you align everybody's interests. So it's the opposite of the artist getting the cash grab. It's actually the artist sharing the economics with their audience and cutting out middlemen such as Facebook, Google, Ticketmaster, marketing agencies, the high frequency traders of advertising. All of the things in the middle can go because you have a direct relationship with your customer. It is game changing. People can't see it yet because they've not seen it. The big one to keep your eye on is Ape Token. That was the first one around the Bored Ape Yacht Club community. For people to understand is that was a bunch of 10,000 NFTs, and then there was a few others around it. So there's about 25,000 holders of these NFTs. The reality is they then drop an the ape token, which is the social token, it's worth $2 billion because people want to participate in what is going on in this network, which is there is music producers creating music around the Bored Apes. There's Universal Music created a band around it. There are films coming out, cartoons coming out, games by Animoca Brands. I mean, it is exploding. It's like Disney being built from the ground up, and you get a share of Disney from the ground up. It's revolutionary.
Absolutely. I mean, Bored Ape is one of the hottest things that is there in the market now, isn't it? I saw that you also have one for yourself, and you updated your Twitter with the image for that.
Yes, I bought a Bored Ape, and they're expensive because these are ultra scarce assets in the middle of this ecosystem. So imagine being able to own one of the original Disney characters. Own it. You own the IP. And imagine if you'd owned Mickey Mouse, right? You were a multi-billionaire. That is what these things are about. And your access to the community and allows you to be an OG, and you have the original status within it and you own the IP of that. And who knows where that leads to? I've already been asked, can I use it for a music video? Because, Timbaland, the music producer, has built a band around Bored Apes, stuff like that. So it's really, really interesting.
Interesting. So I think you have answered this question by Eddie, who was more or less, but otherwise, what he was actually asking is, it is overwhelming to stay on top of the space, NFT space. There's so much going on. There's so much actually being produced. And I know we need to be looking at communities, but what communities should we be following? This is something that I've heard from so many investors about the space. And yes, Ape token makes sense, but then comes the next one because is it one of those cultures? Like, is it going to lose value later because people lose focus?
That's not a diversified portfolio to just own Ape token. It's fine.
Yeah.
You either have to hire a 21-year-old who's been in this space. Honestly, everybody's doing that. People like Alan Howard have hired kids to try and build out their portfolios, or you have to find a fund. So there's a few funds. I'm going to be launching an NFT fund in conjunction with some famous people in this space. Punk6529, who's very famous in the space, has launched a fund. There's a few funds starting up in NFT world, and that's the best way to do it. Because really, it requires huge expertise. Now, you might focus on that, and that's okay. But it's like being a technology investor. It's very hard to know everything going on, or a biotech investor. I mean, these things are really complex things, as is this space, and it's moving very fast. So I would say for people allocating capital, you either buy some scarce assets like a Bored Ape, CryptoPunk, and some of these, and just start monitoring on Twitter things going on, things that are interesting. Or do the opposite and say, fine, look, the best thing for me to do is just allocate it to a fund and let somebody else figure out how to generate alpha and beta from this space. Because it's huge.
Absolutely. So I do want to actually cover a little bit more around your fund strategy and all. Just want to talk about it a little bit. But before we go to that, there's a second part of this question. So we already covered about your digital asset allocation and how it looks like. So 80% Ethereum and rest 20% into other assets. But then there was a second part, and that is about mitigating the risk of any crash.
I can see that. So my allocation is 100% of my liquid net worth, 100%. Okay. And it has been for 2 years. So I have a big tolerance for risk. Why? What is a crash? Again, we're looking at the mean reverting world of stuff like commodities. What you're talking about here is, what is your downside? Well, gone down 50%. The prior year, Ethereum was up 400%. So that was an 8-for-1 risk reward. The year before that, basically the risk reward is so phenomenally, ridiculously skewed. These are the best performing assets in all recorded history. I mean, Bitcoin's up 2 million%. The Bored Ape Yacht Club holders who got the first Bored Ape and then got dropped all of the various parts have made 2,500% in 18 months. So the volatility is a feature and not a bug. So if you should be expecting 50 to 70% downsides in anything that you own in this space. And you should be expecting 10, 20, 30, 40, 50x over periods of time. So therefore, the risk reward is always the best risk reward you've ever seen. And the only way to figure out if the risk reward has changed is if it breaks that log channel I was talking about, the logarithmic regression channel. If it starts breaking that, it tells you the network is now not growing, which, as you said before, how do I know that this network's going to keep going? Well, you'll be able to tell from the chart whether that's going or not. And yes, you will have lost 50, 60% at that point, but you'll be able to figure out, okay, I've got a broad allocation. It's not going to happen to the whole market. There'll be whole periods, much like equities going up and down with a cycle, fixed income goes up and down with a cycle, commodities do too. But over time, the exponential elements of these assets make everything look like a call option always. And that is incredibly powerful. This is why you actually don't need such a big allocation as I've got to make extraordinary portfolio returns or diversified returns. In the short term, the space is somewhat correlated to certain things. It's correlated to the dollar, obviously. It's correlated to risk equities. But that's in the short term. If you ever look at a long-term chart, it doesn't look like anything because it's this tokenized asset, which is scarce, and it's got the call option in the future because everybody's building on these networks. Thousands, tens of thousands of developers are building new projects every day. So it creates this incredibly lopsided risk reward. So volatility is your friend. If it's down 50%, you should be allocating as much asset as you possibly can to it. And if it's down 70%, the broad space, you should be putting as much as you possibly can into it.
I know exactly what you mean. So, but Raoul, this was pretty interesting. So I think we have reached the end of our session. It was really good to have you on board in here and also to give a quick idea of exactly what you're doing with your fund of fund as well. And also to answer some of the questions that investors had. Now, if any of you who has any further questions around this, anyone who's going to be listening to the podcast that will be released in the next coming weeks as well, feel free to drop a message directly to Raoul in his room in Quidroom. You would be able to find it. We would be posting the handle for Raoul's community in there. So find him there, post him the question. He will definitely be more than happy to help you in your investor journey and to make it a lot more easier for you to invest in the space because he completely believes in it.
Yeah.
Sounds about right.
And I will say the same thing I've told everybody that I know is you are dramatically underweight. You have no comprehension. You are short the call option. Everybody is. And the more you dig into the space, the more you realize how big this really is. And that whatever your allocation, I feel underweight and I'm 100% of my liquid net worth. And I feel wildly underweight because of how big this is.
Excellent. Great words. Good things for investors to think about. Great to have you on board here, Raoul, and have a good morning there. Cheers.
Great, and I look forward to chatting in the room as well with everybody.
Sounds good.